Hey, I'm Gene Goldman. Here's a look at the week ahead for the week of June 12th. We have a big week this week. We have a Fed meeting on Tuesday and Wednesday. From this meeting, I have three expectations. Number one, the Fed likely pauses its rate hikes, given the fact that data has been weakening on the economy and the Fed needs more time to assess past rate hikes and how they're affecting the economy. As we talked about this in the past, it takes about 12 to 15 months for a rate hike to have its full effect on the economy. The Fed started to raise rates in March of last year, and we're starting to see the effects of these hikes on the economy. You're seeing regional surveys are pretty poor. This is the first look at the June economy. Jobless claims last week came in higher than expected. As you see here, ISM survey data, this is that data on services and manufacturing, are sharply lower. And a pause is consistent with recent Fed speak from Powell, from Waller, from Harker, and most importantly, from Philip Jefferson, who is the nominee for the vice chair. All of these Fed members have said that they do want to see a pause at the June meeting. So again, a pause is consistent with recent Fed speak. Second of all, expect the Fed to update its summary of economic projections. This is called the dot plot. And remember, this is that report where each Fed member anonymously indicates where they see economic growth, inflation, interest rates. First of all, expect, given the fact that the debt ceiling has been increased, which takes a risk off the table, and bank stress has been fairly stable, the Fed needs to focus its full attention on fighting inflation. So despite the June pause, given the strength of the labor market, given the fact that inflation is still above the targets, expect the Fed to maintain an upward rate bias and probably forecast in the dot plot one more 0.25% rate hike, and most likely raise their 2023 end of the year target to reflect this. Second of all, expect the Fed to ratchet up 2023 economic growth a little bit because we are seeing stability in this old bank stress. And third of all, expect the Fed to lower its year-end unemployment rate. Right now, the unemployment rate is 3.7%. It's going to be very hard to reach the Fed's 4.5% target that they indicated in the March dot plot. So expect the Fed to bring this down a little bit. The third thing we'll get from this Fed meeting is the Powell press conference. As you know, Powell is the head of the Fed. Powell will likely need to explain why the Fed is pausing in June, although they're raising 2023 interest rate expectations. Second of all, he's got to focus on his higher for longer policy stance. This is consistent with recent Fed speak messaging. And third of all, he's probably going to talk about the fact that the economy is strong enough to handle all of these rate hikes. The key takeaway this week, the economy is starting to feel the effects of rate hikes, but the Fed needs more time to gauge it. The June pause gives them that time to assess their rate hikes on the economy. The Fed is close to being done, but by alluding to one more potential rate hike, this gives the Fed this proverbial arrow in the quiver. Thank you for listening. For more information, please follow us on Twitter at Cetera IM. See you next week, and thank you.